What's up, everyone? I hope everyone had an amazing holiday with friends and family. And as we go into the end of the year, we will be discussing gift documentation for Fannie and Freddie. I've seen many times mortgage professionals try to over document conventional gift funds, which might require more of a headache than it really needs to be. So let's dive into the guideline. Gift funds: a borrower of a mortgage loan secured by a principal resident or second home may use funds received as a personal gift from an acceptable donor. Gift funds may fund all or part of the down payment, closing costs, or financial reserves subject to the minimum borrower's contribution requirement. Gift funds are not allowed on investment properties. Make sure you guys understand that. There is no time that you can use gift funds for an investment property. Not everyone can be a donor, and the donor cannot have any relationship with the builder, the developer, real estate agent, or any other interested party in the transaction. A donor can be a relative defined as the borrower's spouse, child, or other dependent, or by any other individual who is related by blood, marriage, adoption, or legal guardianship. Or the donor can be the borrower's fiance or domestic partner with proof and documentation. A gift letter is required on every single transaction. Gifts must be evidenced by a letter signed by the donor called a gift letter. The gift letter must be specific dollar amount of the gift, specific the date the funds were transferred, include the donor's statement that no repayment is expected, and indicate that the donor's name, address, telephone number, and relationship to the borrower. When a gift from a relative or domestic partner is being pulled from the borrower's funds to make up the required minimum cash down payment, the following items must also be included: a certification from the donor stating that he or she has lived with the borrower for the last 12 months and will continue to do so in the new residence; documents that demonstrate a history of borrower and donor shared residency. The donor's address must be the same as the borrower's address. Examples include, but are not limited to, a copy of driver's license, a bill, or a bank statement. This is where a lot of mortgage professionals over-document. I know on government loans we have to fully source the gift, showing the exit of the funds in the donor statement, but conventional is a little different. The lender must verify the sufficient funds to cover the gift are either in the donor's account or have been transferred to the borrower's account. Acceptable documentation includes the following: a copy of the donor's check and the borrower's deposit slip, a copy of the donor's withdrawal slip and the borrower's deposit slip, a copy of the donor's check to the closing agent, or a settlement statement showing receipt of the donor's check. When the funds are not transferred prior to settlement, the lender must document that the donor gave the closing agent the gift funds in the form of a certified check, a cashier's check, or other official checks. This slide might be a little hard to read, but Fannie's guideline is at the top and Freddie's is right below. I wanted to show you guys a comparison from each agency. For the most part, Fannie and Freddie align with gift funds, but there are slight differences between the guidelines. Fannie requires borrower to bring 5% of total funds needed for closing for a 2 to 4 unit only. Freddie states that a mortgage secured by a second home with an LTV of greater than 80% requires a 5% minimum contribution from the borrowers, and mortgages with shared equity plans, the borrower must bring in 5% of the owner's occupant's personal funds. That's it for this week, guys. Thank you so much for tuning in. And as always, please make sure you like, subscribe, and if you feel that someone out there will benefit from this content, please make sure you share. And see you guys next week.